Hi, folks. Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory. Thought we'd come to you today with a brief market update, kind of let you know what's going on out there. S&P 500 right at about 6850. That is up about 16.8% year to date. So equity markets obviously having a fantastic year. Pretty close to the all-time high for the S&P, about 1% off the all-time high after what a lot of people think was a rocky November. It's funny how many people came to me and said the world was ending in November. We'll just point out that the market was actually up 0.25%, 25 basis points during the month of November, which is, once again, a reminder that, frequently the media plays things up in a way that isn't actually true. To round out our sort of markets recap, the bond market represented by the Bloomberg Barclays Ag is up about 6.8% year to date. So bonds also having a very, very good year for a blended portfolio. Most of that return is actually coming in the form of coupon. So the yield on the Ag is right around 4%. Once again, a reminder that we are in a very different interest rate environment than we were, a couple of years ago. All eyes are on the Fed this week. They are actually meeting tomorrow, and they are widely expected to deliver a hawkish cut, as the market is, sometimes is now referring to it, which is somewhat of a confusing statement. When we think of the Fed as hawkish, we normally think of them as wanting to fight inflation, concerned about inflation, thinking about raising interest rates. When we think of the Fed as dovish, we normally think about them concerned about unemployment and so looking to lower interest rates. And so the phrase hawkish cut is a little bit of an oxymoron. I like to think of this situation a little bit like when I try and plan a family ski trip. And my wife, who is not a huge fan of skiing, says something to the effect of, well, I'm going to do this, but I really don't want to do this. And by the way, that's not how my wife sounds. That's not neither here or there. The Fed basically saying, hey, we're going to give you an interest rate cut here, but we're not super excited about doing it, which I think highlights a little bit of the tension that the Fed continues to be under. The employment market, as we've talked about at length on previous updates, not quite as strong as they would like it to be. The job creations number, not really where they want it, but yet at the same time, that core inflation number still running a little hot between 0.2 to 0.3% every month, which annualized is above the Fed target of 2%. The Fed in a little bit of a, tight place, and they're, letting you know that they are going to give you this cut, but they wish they didn't have to. So we'll see. I think there's going to be a lot of eyes on commentary for, to try and tease out whether or not there's another cut coming potentially in early 2026, or if the Fed will be on pause from there. So a lot of reading of tea leaves. Last but not least, I would just note that it is December, which is tax loss harvesting season, here around RFG. For those of you not familiar, it's generally a good idea in any type of taxable account, certainly at the end of any tax year, to sort of go through the account and recognize any losses that are available in the portfolio to sort of find and recognize. You can do that to sort of offset your current year tax bill, offset any capital gains that you might have recognized earlier in the year. And then, to the extent that maybe you don't have any gains that you recognized earlier this year, you can actually use the tax loss harvesting process to carry that capital loss forward so that you can use it against positions in future years. And from a tax management standpoint, it's generally a good idea to go ahead and go through and do those tax loss harvesting exercises, at the very least at the end of every calendar year, to make sure you're not carrying a loss over a tax year, an unrealized loss over a tax year. And we are in the process of that here at RFG for a number of accounts. The issue is there's not a lot of losses. In fact, when I went through the big trade blotter for, we loaded up about 10,000 accounts and wound up with about 200 trades. So we are going through the process of tax loss harvesting, but I just want to let you know that there's really not that much to harvest, which is good good news. Most of you are sitting on positions that have gains, not losses. And so as we go through the process this time, you may not even recognize any trading in your account, depending on whether or not we see a loss that we can harvest or not. So with that, as always, if you have any questions, please feel free to reach out to me or to your advisor. I hope you're having a great day, and I look forward to talking to you again soon.